Hello, everyone. My name is Dan Schoonmaker. Thank you for coming today to the May Sustainable Muskegon Forum. This is a series that is put on in partnership between my organization, the West Michigan Sustainable Business Forum, the Muskegon Area Sustainability Coalition, and the County of Muskegon. My name is Daniel Schoonmaker. I'm going to be your host today. I am the Executive Director of West Michigan Sustainable Business Forum. I'd like to thank Grand Valley for hosting us, Merrill, Lynch for sponsoring the program today, and the Community Foundation of Muskegon County for partially funding our program. Before we begin, a few quick updates and housekeeping items. First, all of our cutleries and lunch materials today are compostable, and they should go in the receptacle marked in the back for compost. If you brought anything else with you that is not compostable, please put that aside, and we'll find some other way to dispose of that. We have not scheduled our next meeting at this point. We expect it will be either in late June or early July. We are going to be taking things a little slow in the summer, and then we'll be starting up again in the fall with more regular programming. If you're not aware, this is an initiative that is put together in our partnership to help raise visibility of sustainability in the Muskegon area. If you're interested in becoming involved in the planning of these programs, as well as beginning. Sorry, I'm getting my stutter kicking up again. If you're interested in becoming involved in this program, or our soon launch working groups around the spread of recycling capacity in the West Michigan area, raising the visibility of sustainability in the Muskegon area, and hopefully, if we find there's interest among coming out of today's session, more intentional conversations around environmental justice in the Muskegon area, please see myself or Equity Program Manager Chris Patron today. We'd love to get you plugged in, and promise that it is not too overwhelming a commitment. You'd plan and say at a meeting or so once a month. We do hope to get more people involved, and please don't be shy if you do have an interest. Please also leave your name tags on the way out today, and we'll enter you into a drawing for either a prize or a gift card. This month we have some wonderful succulents, and our winner is Sandra Brookhouse. Thank you for returning your name tags. This does allow us to keep our costs low. Before I get underway, I'd like to welcome our sponsor, our sponsor and resident expert on sustainable investing, Kyle French, who is a financial advisor at Merrill Lynch, to talk about his work.
Dan, thank you for the opportunity to take a couple of minutes and share a few things about me. I'm a financial advisor at Merrill Lynch, and we're a team of 6, and we specialize in financial planning and wealth management for multi-generational families and business owners, and we have a focus on ESG investing. And so what we're going to talk about today is impact investing and aligning your wealth with your purpose. And you may have heard, really what is impact investing? How does it work, and how should we think about it? You probably have heard terms like ESG, value-based investing, sustainable investing. They're all terms to interchangeably discuss the same concept, which is investing for impact. Over the next few minutes, I'll describe the various ways that you can practice impact investing. And as I do, think about those causes or those activities that you want to oppose or support through conscious decision-making in your own personal investment strategy. So my goal in the next few minutes is just to educate yourself and help you be in a stronger position as investors to make decisions on how you can incorporate your personal values into your overall investment strategy And I hope to illustrate the point that the spectrum for doing well for yourself financially and doing good for others is a lot narrower than you may have thought before. So first is socially responsible investing. You may have heard of this concept. It's essentially screening out entities or companies based on faith-based or your personal belief system. So what this will do, fund managers will screen out companies and remove companies that conflict with your personally held beliefs. For example, this could be companies that have child labor practices in developing countries. We can apply a screen and remove those from your portfolio. This could be based on specific sectors. This could be weapons manufacturing and distribution. This could be firearms, and removing those from your portfolio. Practices that are in conflict with your religious beliefs. If you practice Islam, this could be practices that contradict Sharia law. This could be, tobacco, alcohol, and gambling. For Christian values, this might mean weapons manufacturing. This might mean human embryonic cloning. This might mean abortion. So we apply these screens to your portfolio and remove these companies that contradict your personally held beliefs or your core religious values. And what the fund manager will do is try to find a replacement for this company that can exhibit a similar investment characteristic. Another approach, so where the prior approach is going to remove companies from your portfolio, sustainable investing is going to proactively seek out companies that excel in environmental, social governance factors, so ESG factors. Companies that exhibit these ESG factors are folks that promote and achieve sustainability, that encourage and measure corporate social responsibility, and that are leaders in fair trade and factory worker safety. An example of this, if you had the opportunity to hear Ashley Fahey speak last week from Goodyear, this company has published sustainability efforts. They publish progress towards those sustainability efforts. They're transparent. Those are the kind of company profiles that we look in, excuse me, we find that when you look beyond just the fundamentals of a company and you apply these ESG lenses, you can really get a lot more insight into a company than just what the balance sheet might suggest. So take a modern example, Volkswagen. Does anybody remember the Volkswagen diesel emission scandal, the Dieselgate? I had a Volkswagen station wagon, which I loved, but I fell for the clean diesel marketing of it. And what happened was Volkswagen was the largest auto manufacturer in the world, composed of many, many famous brands in their portfolio, largest market share. So they installed a cheat device in their diesel engines, which detected when they were being tested for emissions, reduced the engine output, and passed emissions tests, and then went back into road mode afterwards and spewed many, many times the allowable limit for pollutants into the air. The obvious detriment to the environment is clear, but what we think about in addition to that is what happens to the investor. What happens to the investor that invests in Volkswagen? And what happened was the $20 billion lawsuit, which was the largest at the time. Their stock price went down about 20%. And essentially, what we're seeing is when you look at this ESG lens, in addition to the fundamental analysis, companies in our studies have less price volatility, have less earnings volatility, and have significantly less risk for bankruptcy, about 90% less risk for bankruptcy for a company. So for your portfolio makeup, that's an attractive characteristic. And Volkswagen is a good example of what happens in addition to the environmental impact. What happens when you disregard environmental factors? What happens to the quality of your company? And we find that companies that care more about these things have better longevity. And it makes intuitive sense. When you are less likely to make short-term concessions to meet the next quarterly bottom line, when you care about worker safety, when you care about inclusive HR policies, when you care about sustainability in the environment, you have a longer game in your sights. The next approach is based on specific themes. Merrill Lynch is a global research leader, and we've taken a look at key markets, policies around the world, and issues around the globe, and we published this report, well-known report called A Transforming World. And in this, we identify key investment themes that are going to be exponentially impactful to humanity in the future. So this is green initiatives, climate change, water security, gender equality and diversity, healthcare, and the global trend towards obesity. Take obesity, for example. You've got a growing trend towards obesity, and it has ripple effects across many industries. Of course, you have higher healthcare costs, more healthcare services to treat patients. We expect a continued rise of the cost of obesity medicine. Related fields, health and wellness, are also going to be impacted by that. Another theme, gender equality and diversity. There's a microfinance fund that focuses on empowering women entrepreneurs in Kenya. And what we do is we lend money to women in Kenya, and that allows them to be their economic leader in their family, lets them send their kids to school, and lets them be economic drivers in their community. And when we have equality and economic input in a community, you can imagine how the shift of gender equality in those communities can be impacted, and that has a far-reaching impact. And I would just raise the question, if you can do well for yourself financially and do good for others, then why wouldn't you? Impact first is the last way of looking at this. What we do is we take investments that are dedicated to addressing specific social and environmental concerns. How this works is we pool investment dollars from investors, give them to specific nonprofits, and based on some agreed upon predetermined criteria, if those initiatives are successful, a return is passed on to the investor. So this would focus on specific things: improving childhood education, reducing prisoner recidivism, addressing homelessness. An example, so Bank of America is a leader in this space. We, in 2013, one of the first companies to create a social impact bond that we partnered with the state of New York to sell social impact bonds, the proceeds of which funded a 5-year program to help formerly incarcerated people re-enter society, help with transportation, housing, and employment, and reducing prisoner recidivism. And so again, just another way I hope to, in this real brief time, just to educate you that your investments obviously is the driver for your financial life, your family's financial life, your business, and generations to come. But there are many ways that you can integrate your own personal